Hi, my name is Bruce Bolger, and I'm founder of the Enterprise Engagement Alliance, and we're an organization dedicated to helping organizations implement the principles of stakeholder management or stakeholder capitalism, which to us is really total quality management for people. And as part of our program, we do our YouTube webinars, but also we summarize these shows in articles. If you don't have time to watch the show, you'll be able to read the summary. And each week, usually, we focus on a different aspect of this overall field. But today, we're in terms of implementation, how-tos, economics. But today, we're going to step back, as we do once a year, with people, two of whom are really following this, one of whom I would consider one of the founders of the field, and we'll meet Ed in a minute. And then also with an individual, David Van Adelsberg of Irrational Capital. He's going to be sharing with us the economics, what we actually are learning about value creation by focusing on people. Our other guest, of course, honored to have you, Ed, as usual, are Edward Freeman. Again, he wrote the book in 1984, Strategic Management, a Stakeholder Approach. Ironically, he was a philosopher before that, has a PhD, I believe, from Duke in that. And then we have Martin Whitaker, who I consider also really one of the true advocates for this field. He's a founder, CEO, and was, I believe, on the founding crew of Just Capital, which actually has helps manage, in a sense, an ETF. And he'll tell us a little bit about that with their partnership with Goldman Sachs. As part of this program, we always like to thank the companies that use our services to help them help clients. And then also just remember, we give away a ton of information. No one has to join, doesn't have to be a member. We're the how-to organization and share all sorts of great information. By the way, Ed's book, of course, is the foundation of our library. And then finally, just to start this conversation, there is no formal definition of stakeholder capitalism. In fact, Ed and I have often have discussed this. I'm not sure he feels there's even a need because they're different approaches. But we felt there was, and in 2020, we created a definition which appeared in Forbes, and it's enhancing returns for investors only by creating value for customers, employees, supply chain, distribution partners, communities, and the environment. And I have to thank Alex Edmonds and Martin Whitaker, who's on this call here today or show today, for helping create the input for that. So I'm going to stop the share, and I'm going to start with you. I was going to start before with Ed Martin, but I'm going to ask you to unmute. And that is not a background, folks. That is a true Christmas tree in Darien, Connecticut, but it is fake snow in the back. So don't buy that. But anyway, Martin, something really happened a couple of weeks ago that really stunned me. And that was the anger that came out about the killing of United Health CEO Brian Thompson. And it was interesting to me is that before the election, I actually posted several articles expressing the belief, I don't think people are really mad at government. They think they are, but I think what they're really mad at is the people that piss them off every day, and that's their employers and they're the people they do business with. But Martin, what do you think? What is this anger? And is there something? Oh, and by the way, a Harvard Business Review published that week an article, I believe, by a colleague of Ed's that he knows, saying that tells us now we got to change capitalism. What's your thought about this anger?
Well, thank you, Bruce, and it's great to be in this conversation. Very timely, and you're always, I think maybe we are always trying to anticipate where this is going, what's coming next. So I get as much from these discussions as hopefully you do from listening to them. I think that it's interesting. It feels to me to be a very transitional moment in society. I don't think people are necessarily angry at corporations en masse. I don't see that. In our polling this year, which is always interesting in an election year, we saw a lot of people wanting more from capitalism. They want it to work better for them. There wasn't a sense people wanted to break the system down, start something new. I didn't sense a lot of anger, to be honest with you. I sense a lot of desire, maybe frustrated hope that people they want the chance to build a better life for themselves and their families. And so I think I also think we're in a very kind of socially divided moment. There was many, I've followed some of the response to the tragic shooting and killing of the United Healthcare CEO, and was just shocked by some of the level of response from those who seemed to be joyful about that. I couldn't make any sense of that. But also, I saw the pushback against that response, and it was reminiscent to me of other kind of moments that have happened over the last few years where a social issue has sort of spilled out, transcended business, politics, society, civil discourse. And I think really we're just in a very tumultuous period. So I don't think there's anger at capitalism myself. I think there's a desire, a very strongly felt desire for business, for capitalism to do more for them. Interestingly, in our rankings this year, one issue that shot to the top, not to the very top, but number 2 issue was ethical leadership. People, I think, want leadership, whether it's in business or elsewhere, to try harder to do the right thing. To try to be better, to try to be more about what is better for most of society. And even though that may be difficult, to aspire to our sort of higher angels. And, I think that kind of typified for me the moment that we're in is sort of this desire for something better that seems to be somehow there, but very hard for people to actually see and experience tangibly themselves.
Well, and I want to get back to you because one of the on your surveys, because as you know, we publish them every time you publish them. And one of the things I've noticed is that some of the things we're going to talk about with you are nonpartisan. People agree across. So we're going to get back to you on what might be unifying principles, perhaps. But Ed, I want to get to you. Obviously, folks, Ed is, he's part of the problem. He kind of started this by crystallizing a framework that, by the way, Peter Drucker wrote about in the 1940s. Coincidentally, the man who's W. Edward Deming, also many of the principles. The Stanford Research Institute wrote, I believe, a report in 1963. We all know Klaus Schwab's original Davos Manifesto, but frankly, Ed, your book, I think, was the first to really coalesce the subject, the framework, and folks, it's still available. You can get it on Amazon or wherever you buy books. So, Ed, I want to ask you, I do want to get into stakeholder capitalism, how you envisaged it when you first kind of conceived of the framework, but I do want to quickly ask you, were you surprised by the level of anger that came out of that killing?
Well, I pretty much agree with what Martin said. I do think the anger is not at business. The anger is at healthcare and a healthcare system that people don't understand and that many think doesn't work very well. Parts of it do work very well, but parts of it don't. And there seems to be no real effort to fix it in government terms. There seems to be effort to blow it up, but not necessarily to fix what's wrong. And I think that's where the anger comes from.
All right, well, then let's just pivot right then into your work. Um, you obviously, I don't think most people realize there's a whole academic world and that is studying and working on this, the Stakeholder Management Society of the Strategic Management Institute, but it really had been completely under the radar screen until the Business Roundtable issued, at least in my view, maybe Martin will disagree, but I think what really shed it into the light was the Business Roundtable statement, so much so that even my son, no joke, called me up when he saw that, said, "Dad, look at that." He understood. So, Ed, my question to you, you were an advisor, if I recall. You were on the advisory board of the Business Roundtable. I don't think you were
Yeah.
somewhere it says maybe AI is lying, so I'm glad I asked you. Because somewhere I actually saw that you were on the advisory board of the
No,
roundtable.
we had an institute called the Business Roundtable Institute for Corporate Ethics, that was started by Frank Raines when he was at Fannie Mae. We did that for about 10 years or so, but then we sort of parted ways around 2015 or so. But we had done a book called Managing for Stakeholders
Hmm.
under the auspices of the Roundtable. We had a series with Yale called the Roundtable Institute for Corporate Ethics and Leadership. And their statement was very much in line with kind of what we had done, but I really didn't have a personal part in that.
Okay. And that's not really relevant to this. I was just curious. But what is relevant to this, were you surprised, as I certainly was, when this got tangled up into woke capitalism? That did that come as a surprise that all of a sudden people
Well, to be honest, Bruce, not much of what happens in politics comes as a surprise to me. I mean, you just never know what someone's gonna do. Clearly, the people that tried to make this about being woke hadn't read anything and hadn't really thought very deeply about things. Look, forever, businesses have had to have products and services for customers, try to have suppliers who are partners, employees who are partners, not get run out of communities and make money. And those things go together. It's always been true. And if you think about it like that, that's what you do as an executive. Stakeholder capitalism is the surprise is that it's different from this old idea that business is just about the money. That's the old broken idea that we can't get past fast enough. That's not to say that making money for shareholders is unimportant. Of course, it's important. Again, it's foolish to think that profits are bad or that making money for shareholders is bad. But this is a better way to think about business because it lets you say it combines. It's not just about making money for investors. It's about doing that and powerful word, doing that and doing the right thing. Both of those things are important. If we continue to separate the business from the ethics, we will continue to have these endless debates about the ethics of capitalism. What the stakeholder idea tries to do is figure out how business is possible in a world where there's very little certainty, uh, try to understand the ethics of capitalism and how that works, and tries to figure out what we ought to be teaching in business schools. And it's a vocabulary that tries to deal with those three things. And all three of them turn out to be important.
And we're going to circle back to you more on this, Ed. But I want to get to David now. So get ready to unmute there, David. Because, one of the big notions that came out of this anti-stakeholder capitalism backlash based on, as Ed said, no one understanding what it was or is this notion that you're taking money away from your shareholders, that you're taking the money that should be distributed as distributions or as dividends, and instead lining the pockets of abstract social causes that the CEO has. I would argue we're doing that now based on the amount of money donated to politics, but that's another story. David, you folks, and David is a founder or co-founder of an organization called Irrational Capital, and I'm going to give you a shot to explain why uh, the framework that Freeman came up with in 1984 is not asking investors to make a sacrifice. It's telling investors to look at value creation in a different way. Could you explain what you've learned and tell us a little bit about the work of you and your colleagues and the value that is demonstrated to be created if companies really focus strategically on people?
So, Bruce, thanks very much. And it really is an honor to be here. And this is a fascinating conversation. I'd love to be asking some questions about this as well. Just by background, Irrational Capital, we connect the relationship between employees and their employer and look to that connection as a predictor of future equity value. So what we have discovered, and this has been codified into a new investment factor called the human capital factor. And what we found is that when employees are treated well, and this is not just on the extrinsic characteristics, right? Financial elements, compensation, benefits, and so on. More so on what I would call the softer side of Sears for those who are old enough to remember Sears. But these are things that are human, that are emotional, and that are deeply important to people. Pride, trust, transparency, am I valued? Am I feeling appreciated? And when organizations, the model that I saw for this subject has business in the middle, but the truth of the matter is the business itself is made up of people. And so when we treat those people well, what happens? Well, we've all been part of organizations where we feel connected, we're leaning forward, and there's an energy, right? We're doing more, we're willing to give more. And what's the result of that? The result of that is just better outcomes. And then, some of us have been a part of organizations where the reverse is true, and we're sort of leaning back, and that has its impact. And so this codification of the nature of that relationship has a powerful implication relative to the ultimate metric of performance of a company in traditional sense, that being a company's share price. So it's equity value. We've had the honor of having J.P. Morgan write a variety of very detailed research papers. I mention that because they're considered to be the top quantitative analyst
Analytics.
on the street. They published their 5th paper, and if you go to irrational.capital, we're happy to send it to you. But let me just tell you 2 things that they said about this, right? Because this is the whole point. And I think that Martin and Edward have said it, like when you treat people well, you get an outcome that's positive, right? And it's positive broadly in the concentric circles. But here's what they said in the first report. The human capital factor, so this is those companies that are treating their employees well, strictly dominates all styles across all metrics. It has the highest returns, lowest volatility, highest Sharpe ratio, highest hit rate, and lowest maximum drawdown. So if you're a shareholder, you're interested in those things. And by the way, people are going to feel very differently about the nature of the relationship they have. In the latest report, and this is related to one of the ETFs that's underpinned by our work, it says the Human Capital Factor Index exhibits. Now, remember, this is the #1 quant research, so this is independent validation. So these are I'm not using these superlatives. This is a quote from page 7 of this report. The Human Capital Factor exhibits a perfect track record for calendar year performance, outperforming the benchmark in every single year of our sample. While it did so only marginally in 3 years, the overall performance record for this period is stellar. This goes back to 2000, I think to 2012, it might be 14. Even in 2024, it has managed to outperform its benchmark so far, which has returned in excess of 20%. So there's no compromise here, right? This is not a question of, are we in favor of some philosophy, right? ESG or DEI or whatever it is. This is nonpartisan, right? This is do the right thing, everybody wins. And the beauty of this is that the data supports it, the economics support it, the track record of live financial products support it. And so the idea here is to demonstrate this with as much, the largest base of assets that we can, because that's, we think, is going to wake people up to say, wow, look at that performance. What is it that they're doing that we're not doing? And let's get me some of that.
Well, we're going to circle back to you. I want to delve a little bit more into the human capital factor, what those elements are, because it's fascinating. But Martin, I said I was going to ask you about the PR elements or the marketing elements of, pardon me, of your surveys, what you're learning. But actually, I'm going to ask you to wear your other Just Capital hat, folks. Just Capital made an arrangement, I believe, in about 2018. You'll tell us, Martin, with this, well, you'll explain how the Goldman Sachs has developed an ETF based on your metrics, and it too has outperformed. So could you tell us a little bit about the Just Capital ETF and how it's performed and what it's comprised of?
Yeah, I will, Bruce, absolutely. Let me just echo what David said, and what Ed knows. This is about business performance. One of the problems with framing stakeholder capitalism and any kind of new idea in this area of kind of non-traditional metrics is around terminology. The whole space has got caught up in terminology, and it's like they've been the Tower of Babel for the last decade. I think we look at the numbers. At Just Capital, we let the data do the talking. Our broad-based index, which we licensed to Goldman, which I'll describe exactly how we construct that, but it reflects the best companies in every industry. That's outperformed the Russell 1000 benchmark by 10% since December 2016, when it was launched live. The Just ETF was launched and still trades on the New York Stock Exchange with managed by Goldman Sachs Asset Management. That was launched in June 2018. Our Just 100, which is just the top 100 of companies every year, has outperformed the Russell by just under 40%. A worker-focused index, which is all the issues David just described, that's beaten the benchmark by 90% since January 2018. And if you look at the top 10 versus bottom 10%, one of the things our model does, I think, very well is identify real leaders and real laggards. If you look at the spread between those two, right now it's pushing 90%, 90%. So you don't have to care about any of this stuff. All you need to think about, all you want to do is make, better returns, risk-adjusted returns. If that's all you're focused on, you should be looking at these signals and finding a way to put them to work in your investment activities. So, we can explore this and break this down into more detail. In our model, Bruce, that the worker-related criteria are more important, much more heavily weighted. Something like 40% of our overall model is worker-related. Why? Because when you ask the American public on a representative basis what issues matter, 40% of those issues by sort of weight and priority are worker-related. How people experience their lives as an employee or as a worker. So anyway, to me, the jury's not just out, the jury's gone home and the courtroom is done and everyone's back home, having a nice glass of wine at this point. It's over, the numbers are in, and the question is, how do you pursue it? And then what does it really mean for you as an investor? And then as a company leader, how do I improve my individual business performance through a stakeholder lens?
So thank you. And I'm going to get back to you on how all of this is viewed, because as we all know, no one's ever heard of stakeholder capitalism. It's just you go to a party, you mention it, no one knows. But it's changing. But Ed, getting back to you, when you first envisaged this concept, you focused, ethics is obviously extremely important. But the way I read your book, I didn't see ethics as a moral issue. I mean, it's a natural, but I didn't see you preaching it like a holy man. To me, the way I read it, it's better business. and that it's like Milton Friedman. Everybody seems to forget that he said you pursue profit, but there's a big caveat there, and he's written about it multiple times. You've got to be ethical. You've got to not just by the law. You've got to be consistent with the norms of your time. And he also wrote that, and if you're really being a great company, and I think he presaged greenwashing, he said you don't brag about it because it's better business. It would make total sense to make sure your employees, he wrote in one place, are well housed and well paid. So you shouldn't brag about it. But Ed, were you envisaging this as a moral handshaking at business?
Look, Bruce. First of all, morals and ethics mean kind of roughly the same thing to me. I had way too many philosophy courses, but I want to add something to what Martin said. As an investor, you don't have to care about people. You just get the numbers, and that's fine. But as an executive, you do have to care because if you don't, people will know that. And I think that's part of the confusion. When you say, well, this is just better business, yes, but if you do it just because you think you're going to make more money, you will fail at it. And so executives have to care about their stakeholders. I think David's work shows that, and Martin's work shows that. And so we can't confuse the investor role from the executive role. Yeah, and if you don't care about the people that work for you, they're going to know it. Now, is that an ethics or a moral issue? I think it is. I think we need to care about the people we're in relationships with, or we're not in a relationship. We're using them only for ourselves. And if that's your management philosophy, you're going to use employees for what they give you rather than it being mutual. That yes, employees are going to give you something and you owe them something. That's an ethics issue. So it's an and here. Again, yes, you're going to make more money. This is just good business, and it's the right thing to do. And both of those things are important. What pisses me off is the people who think this is just better business. Ethics has nothing to do with it. Well, I'm sorry. How you treat your employees, how you treat your family members is an ethics or moral issue as well. And that's in part of what makes it work. Is that people actually care about their employees. Investors don't have to, but executives and managers do have to care. And so I don't want to downplay the sort of ethics or moral part of this, because that's what's wrong with our old shareholder primacy capitalism, is nobody seems to care about what the effects turn out to be.
And that's just to jump in on that. I think what we hear when people are upset, go back to your first question about angry, is like, we are not participating in that. The success of the business is not coming back to us.
Right.
And I think people want more of that. Like it is a moral issue. You build a better business, but people want to participate in that success if they're helping to create it.
100%. Can I just add one other thing?
Please.
100%. People also, they want to feel appreciated, right? This is a real human characteristic. Building on something that Edward just said, which I think is really important. I think what he's talking about at some level is the difference between policy and true action. Everybody has the policy, right? I mean, what company hasn't copy pasted something that's very flowery in terms of their aspirations? Question is, how is it truly being implemented? And that's not easy to measure, right? It's easy to, you can count the policies, right? That's very easy. But counting the real action in the field, that's a different matter. And that's what's most important.
It's in the systems, it's in the processes, it's in how you treat each other every day, which is why the kind of work that Just Capital does is so important, because it tries to get at that stuff. Purpose doesn't live in the mouse pad. It doesn't live on the pen or on this thing on the wall. It lives in how you treat people every day, what you do. You're absolutely right about that, Dave.
And let me ask you something.
Sorry, Bruce.
Go ahead, Mark.
The result, what David just said, is kind of interesting. Something we have, I think two things are happening. One is people are tired of policies. They're tired of pronouncements. They're tired of promises in the future. and targets. They want action. They want people to walk the talk. They want to see what's happening, and you want to see results. So people are interested in what you do, not what you say. Point one. And secondly, that's no different from financials. Would you invest in a business if I said to you, well, Bruce, I have a policy to be profitable in 3 years' time. I've made a commitment and a very strong target, and I've just delivered a very powerful speech, which would I'm sure convince you that I'm really serious about being profitable. Of course you wouldn't. It's in the numbers. You have to track performance, and that's the business discipline that is hard. It's just hard work to do that. And I think a lot of people perhaps don't see it as being hard work or not prepared to put that work in.
It's
And I
hard
love the
work,
fact
and
that you
it's not,
use the
and
word
it's not.
system. And that's why I often, to help people understand this, I say, look, it's total quality management for people. It's a system, it's holistic. It involves every element of them. But irregardless of that, what do you say, Ed? And I've gotten this response. It seems to be totally logical that companies that have customers that love them, their employees are really willing to bend over backwards, as David pointed to. Your supply chain is with you. They're going to help you on pricing and cash flow. Your distribution partners are all in. Your communities are happy when you open up. And so, gosh, wouldn't it make sense? Oh, and you don't impose long-term risks on your shareholders by polluting, right? You try to avoid that. So, okay, your company does better, it seems to me, but you know what you'll hear back? Oh, that engagement, that's not causative. It's a correlation. In other words, like Apple, they'll say the example you'll get is, well, Apple's such a successful company that the end customers and employees love it. So my really question to you and to David and to all three of you is it a correlation or is it causative? That if I really, and David, I'm going to get back to you in a minute on this. If I run my company focusing legit, what's the word? Authentically on these principles, is it causative or correlative that I'm going to see that upswing?
Well, I would say that's not the right question. Um, uh, People want guarantees. You know, they want to know if I do it this way, am I guaranteed to make money? All right. And what I tell people who want guarantees is they need to buy a refrigerator because they come with guarantees.
Hmm.
If I really truly authentically try to maximize shareholder value, am I going to maximize shareholder value? No, because I mean you might, but it turns out you might make mistakes. The world might change. These things happen. So no guarantees. The right question is, if I run my business this way, is it possible that I'm going to be financially successful? And as everyone said, the answer to that is we don't need any more research on that. The answer to that's yes. Now, how you do that and how you manage the business so that you capture the interdependence of stakeholders. They don't stand alone. How you deal with customers depends on how you deal with employees, depends on how you deal with communities, depends on your balance sheet and income statement. These things are interconnected. And that's hard. As Martin said, this is hard to do. It's hard to measure the actions that are there. But the question of is it possible to be financially successful? The answer to that is yes. The old question is if you're financially successful and you do the right thing, does one cause the other? Is in my view just a bad question.
Well, I think it's
And
a red herring when people ask it. That's why I asked you.
yeah,
Uh,
because it's not the question of causation is just not there for any management theory like that.
so, David, you guys have actually pretty granularly examined if you know the human capital factor, and I believe there are 31 elements to it or some such thing. What have you found to be, if you can, if you had to say, um, what are the most important elements, the most important drivers, or maybe you can't say that.
No, I can tell you that it changes, it changes. We have a framework which has 7 dimensions, but can I just say something going back to what Edward just said?
Sure.
I'm just gonna make one comment on the question that shouldn't have been asked, which is we don't use any financial data. Okay, so basically what we do is we have the voice of employees in the prior year, and it is used to predict the subsequent year. Now you can, I would call that, it is attributable, right? So
Yes.
this is not looking at financial information historically. They're not looking backwards. You're only looking forwards. There's no way to sniff that line. So you can draw your own conclusion, but it's clearly predictive. If it wasn't predictive, it wouldn't be, it wouldn't be working in this way. And the question about what we've discovered, so we have many elements that feed into a framework of seven dimensions: organizational effective, the nature of engagement, emotional connection, direct management, innovation, organizational alignment, and extrinsic factors. The organizational effectiveness, right? This is not getting in the way of your people. This is supporting them and being able to do so. Over a 10-year period, on an annualized basis, best versus worst. So this is top quintile versus bottom quintile, is over 590%. Over 5.9% annualized return when you get that right, top versus bottom. I can give you the other numbers and so on, and if anybody's interested, we can share it. But like, we're trying to really quantify this, because at the end of the day, this soft language, right? It's been discussed here. There's been a lot of ink spilled. If it was all a matter of how much was said and how much was written, there would be different winners and losers. Here are the numbers. Here's the true impact. And now you have the ability to access it. You can access it through Martin's work and his investment vehicles. You can access it through us. This is not easy. This is not easy work, because how do you know, that an organization is walking this message, is really doing it? How do you know? There's only one way to know. And that is to ask the people in the moment. And short of that, it's, if somebody can explain to me how you could figure it out, I'd love to hear about it. But that's
one of the things that proves you right is Container Store, right? That was a company that was known. They said that they treated all their employees great. Everything looked great. People said was how wonderful, and the company is struggling massively. And it gets back to what Ed was saying. First off, we're not sure they may have been virtue signaling for one thing, but is the bottom line? Pardon me.
I don't think that's right. I think that's a good example. I think what you're going to say of, look, sometimes the world changes, or sometimes things don't work out, or you make mistakes.
Yeah. Well, I was just going to say we don't know.
I think that's right. And I think that we should be really, we should be, very mindful of the point that Edward just made, which is, it's not, this is right directionally. This is right in the aggregate. You can't refute it because the data supports it and the results support it, and the investment performance supports it. It doesn't mean that every single company is going to be perfect.
Right.
Right.
Yeah.
Absolutely.
It's not a one size fits all
Right.
recipe for success. I mean, I know Container Store well because Kip Tyndall, co-founder, former CEO's on my board. We talk about it all the time. It was a framework by which he and his partners built the business. They built a hugely successful company over many years. They didn't lay anybody off. They had this moral, ethical framework, as Ed said. Like it was a set of principles by which they built their business. Now you could look at other big companies and other companies, even people who would say stakeholder capitalism is a load of old BS. People like my good friend Ken Langone, who when he was building Home Depot, you could say that there were principles by which they navigated, very sort of complex issues in order to build a successful company. I think if you talk to anyone who's built a business, you have to have some kind of code, some sort of framework that is the way you're going to build a successful business, which obviously means you have to make money, you want to be profitable, but it's incredibly hard. It's very complex. So you have to have a sort of a framework. And I think what we're talking about here is that scaffolding. Now you can build a lot of stuff around that scaffolding, and that's going to have to be upgraded and changed and modified to fit the times. And it requires constant attention. But that's really, I think, at the root of this, which is what is the scaffolding of a successful company today? And more importantly, what does that scaffolding look like tomorrow?
Well, I was very involved in the 90s in the total quality management movement, and there was all the same debate, all the same nonsense of all this baloney, and a lot of fakers, a lot of people that just checked off the boxes. But there's a lot of scientific proof that quality can dramatically improve when you have a system that's based on principles and that involves everybody in a system. But Ed, we're running toward the end of this thing. You've been, I know you've never, at least from what my knowledge of you, you've not really ever acted like an evangelist. And yet it looks to me over the last year, you've been going around the world a little bit. Does it seem that there's more academic interest in this subject now, or am I just imagining it?
No, Bruce, I think there's there's a huge academic interest, and that's been going on for 25, 30 years. These ideas are taught at most business schools in the world. They don't always permeate all the program the way they do here at Darden. But they're there. I've rarely been anywhere where I had to tell people what the stakeholder idea was, and so that wasn't true when I wrote the book in the 80s, but people know what the idea is now. And they may not know the term stakeholder capitalism, but they get the idea of who a stakeholder is. The hard part is getting them to understand that stakeholders are interconnected. That's the hard part, and that's what makes it hard, and to get them to understand that this is no panacea. Look, I get way too much credit for this. I just wrote a book that nobody read, but a lot of people cited. Uh, and it's all the people that are out doing it now, like David and Martin and literally lots of others. The people that are building their businesses based on these principles, and they have for a long time. We just didn't have a language to kind of understand that because we're so in the grip of this idea that the only thing that matters is money and shareholders. That's changed, and I don't think there's any going back. People have in the sort of backlash have moderated their rhetoric, but I don't know anyone who's gotten rid of their sustainability programs, and I don't know anyone, they may say there's no program anymore, who are not trying to hire a diverse workforce because that's what the workforce is now. So, the language, moderating the language and what you're claiming and all that, fine. But I don't think they're moderating what they're doing. And that's why I say there's not any going back. And
Well,
of
I think
course,
what happened, Ed, having,
if
sorry?
we're right that this is just a better way to do business, of course there should be no going back.
Well, again, I'm going to argue that the reason people like Ken Langone of Home Depot didn't like stakeholder capitalism is Martin, the way it was being interpreted was, oh, I'm going to guilt you into giving money to social causes. And stakeholder capitalism was all about exceeding the demands from all these different people. I'm against that. It's stupid. So, and I really think that's what happened. And why is a whole nother discussion, or how is another discussion. But Martin, I'm going to kind of give you the last say on this because Ed has already, I think, made the statement that stakeholder capitalism is alive and well. It got beat up a bit, but it's moving ahead in the academic world. Oh, and by the way, Ed, you should know that in my research on the subject, people like John Mackey of Whole Foods,
Mhm.
James Sinegal, I believe that's how he
And
pronounces his name,
yeah,
attribute their success, okay, and they give you credit, even though they started their businesses before your book. Both of them have given you credit for principles that have made their companies sustainably successful. So, Martin, my question to you, You know, the principles of stakeholder capitalism seem to me to be unbelievably bipartisan. That Republicans and Democrats generally agree that business should be a source of value creation for everybody and that we should make money without screwing people. So to me, could we say that most people agree with stakeholder capitalism even though they've never heard of it?
Well, I wish you'd given the last word to Ed because I think he deserves it. He's much wiser, certainly, than I. But what I'll say is this: I think if you ask people what do they think about capitalism, what do they want it to do for them, what issues matter most in their world and in their lives, that is the recipe for what we call stakeholder capitalism. I think we certainly see broad-based agreement. It's not just across political, ideological lines. It's by race, gender, economic bracket, education level, where you are in the country. There's some divergence on some issues, but the basics we have that in common. And that's actually one of the things that gives me a lot of hope in the mornings when I get up is all the division that we're fed politically. It does play to the kind of extreme 10, 15, 20%, but most people in the middle kind of want the same thing. And it's what you've just described. So yeah, I do think there's a broad base of support. I think the business of America is business, and that when most people come together to say, well, what does that really mean? We would agree. So I would love for us in the next, 2025 and beyond, to come together around a single framework. I keep coming back to that. Of how can we make capitalism and business work for more people? That to me is the central is the North Star that I think would help us make a lot of good decisions and get more people in this country believing in our institutions and a lot of the things that have brought us to this point. So let's focus on that, and let's get away from disagreements about terminology and arguments about definition, because I just think that is kind of performative and just plays to the echo chambers that have got us into this mess in the first place.
Well said. Well, funny, when quality management was at the turning point in this country, when the Japanese were whipping our butts in every single way, a lot of people forget that Congress created a law and an honor called the Malcolm Baldrige Quality Award. And a lot of people have forgotten about it. And I don't know, Ed, whether you've ever read what the criteria is, but they read your book, okay? Because the criteria is very much out of your framework of addressing all the needs of stakeholders. And ISO standards, every one of them has something called NXL, which talks about the interrelationships of all of your stakeholders. In fact, you cannot technically get an ISO certification in quality unless you can demonstrate how you are addressing the interconnections of your relationships with all your stakeholders. So Ed, your work or thinking, I think, permeates really business going forward. So I really want to thank all three of you. Martin, folk, you should all know Just Capital. They are a not-for-profit. They accept donations. They do a lot of important work to advance this field of thinking. And Ed, again, he has written multiple books. One of them is The Power of And. His classic books are actually in our library, and anybody who joins our organization, we send them that book. David, his company is creating, and we didn't have a chance to talk about David, but there are actually two different stock ETFs, the Happy Funds, three. Okay, I'm sorry we didn't get a chance to tell you about that, but we'll put that in the article and in the summary of the show so that people can, if they're interested in actually investing, and we'll do the same, Martin, for, of course, the Goldman Sachs. So the three of you, thank you so much. And we'll be sharing this article for the months to come. and have a wonderful holiday, all three of you.
Thanks, Bruce.
Thank you. Good to be
Thank
with you.
you.
Thanks, Bruce. Take care, everybody.
Take care.